Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as the market heads into the US Thanksgiving, trading is becoming, in terms of volume, slightly thin. Nevertheless, we can see that the market at this stage has found support after the dollar index, which measures the greenback strength against a basket of 6 major currencies, pulls back to the low 107. Whilst viewing the Australian dollar, we can see that the market has respected the region of 65.5 and currently looking towards a challenge of 66.55. A break there would give further scope to the upside and look towards 67.15 to 67.70.80. However, do remain on your guard as the market is getting very much close now to the US Federal Reserve minutes, and a hawkish statement could send the dollar on a bounce from the low 107 to 108. That would see further pressure returning to some of the markets. But the slightly more dovish, and that is if the market feels that the next rate hike in December will be lower than 75 base point to 50, then the dollar could tumble further towards 106, and that would help the Australian dollar and the euro eventually recover its losses and look towards 105. But in light of the pattern, it has firmed up slightly for the euro, so therefore I do feel that the market should head towards 103.60, 65 today and would need to clear this level to get back on the bullish path to 105. Any weakness would see support from 102.45 to 55. After breaking above the 140.65 level in dollar yen, the market has found a little bit of a problem in terms of demand and is actually falling back to retest that break point. Looking at that level, it's around 140.60, and a break beneath there would reinstate the downside and give the call back to 136.45 to 65 and reassess from there. Keep an eye on this level, as it is crucial to the next move in dollar yen. While holding though, still look towards that top side of 143 to 145. Sterling still coasting sideways, as I feel the market still has potential to reach that 120 area after briefly stabbing and rejecting. Still, the market is looking for a direction into the intraday view, but with a slightly positive indicator from the RSI does give scope towards the upside with 119.15 to 119.55 in view to the challenge. Gold still a little bit to the weak side after the recovery failed above that 1,740. And backing away sharply has left a bit of a question mark of indecisiveness due to the inverted hammer. Still, keep an eye on this pattern because while we still remain weak from the technicals, could still hold towards 1,726 as a potential target and a cap seen around 1,754 to 56. Having staged a very strong down challenge and rejected and posted a dragonfly doji, the market did recover for oil and now looking for a further gain, but would need to clear 81, 80.95 to put the trajectory to 83.90 to 84.30. Technicals are still negative, but no trend anymore to the bear case. And with this weak doji to the dragonfly candlestick, the market could actually gain a little bit further to the upside. Well, that wraps it for the morning. Thank you very much for joining me. And as always, look out the intraday report. I hope you enjoy the great start to the day.